Hey world, it's Ben when we come back with another video. This video here, family, is a video that I did in the past as well, but I just kind of want to reiterate how important it is that if you're paying yourself first and you're saving your money, putting them in banks is not the answer, because if you don't believe me, if you have a savings account, go find out exactly how much interest that your bank is paying you for your savings account. If it's Wells Fargo, Bank of America, Chase, probably less than 5 cents on a dollar. You know, they're gonna say 0.03, 0.01, 0.05. All right. Now some of these online banks, they may pay you a little bit more, but since the interest rates have been so low lately, they haven't had, or either they haven't been given or offering interest rates that are beneficial to you as a savings account holder. It's kind of like if you're investing in a dividend stock, right? And they're only paying you like 3 cents on 3 cents a share. That's really not a lot of money, right? So an example would be like Apple stock. If you own Apple stock is giving you, a lot more per share than a lot of other stocks. I know AT&T is giving me like 40, 50 cents a share. And I think Apple, almost $1 per share for the dividend. And so with that being said, I wanted to talk about two ways that you can actually, and I just mentioned it just now, two ways that you can actually save your money, where one, your principal is protected, and two, you're not being, robbed. U.S. Treasuries and dividend stocks. And right now, like I say, the market is so overvalued right now, so just continue to pay yourself first and then get yourself in a situation when this market crash to invest in dividend stocks that actually pay you. And if you don't know what a dividend stock is, family, a dividend stock is, like I said, example would be like AT&T or Apple or Ford. These companies actually pay you to invest in the company as a shareholder. So for instance, AT&T just last quarter, he's paying like almost 50 cents a share, right? Dividend stocks. Now, what that means to you is, as a youngster or as someone who has, a partner, or someone who's, saving your money, you want to, where can I put my money where actually it's going to benefit me? Well, AT&T and Apple pay dividends. And like I said, I think AT&T is paying like 45 to 50 cents. The last I checked, it was like 50 cents a share. Maybe a little lower now, but Apple pays a lot higher. And there are also other stocks, real estate investment trusts, they call rich stocks. They pay dividends. Actually, they are required to pay dividends. So look into those particular stocks that pay dividends. And you're talking a situation where if you're able to build up your shares in these particular companies, they pay you either every month or every 3 months. And that is an extra stream of income, because I promise you, just having a job, okay, it's not going to do it. And, we live longer now. And you want to make sure that when you do retire, or if in the case that you lose a job or something like that, like how they shut down the country with the pandemic, you want to be able to have extra income coming in, because a lot of people suffered because they didn't have the extra income. But if right now you start paying yourself first and looking into that, because a lot of people say, well, why would I want to invest in the stock market? It's a scam, it's a Ponzi scheme. But there are millions of people that get rich as well as wealthy investing in the stock market. One, you have to have your financial literacy. And what I mean by that, you have to know how it works. There are certain things like with companies, you have to, just like with anything, you're not gonna, go try to invest in something that they don't have any money. You don't want to invest in a company if they're on the verge of bankruptcy. That's why this information is out there, family. It's very transparent. SEC, all these companies that's a part of the stock market, Wall Street, they have to report their earnings and everything to the SEC. That's transparent information. You have Yahoo Finance. You have Bloomberg. You have Market Watch. There are, I mean, if you just Google a particular company, right, you can find out how much this company is making per quarter. So understanding, just like yourself, I mean, you get paid every 2 weeks or every month. You know where your money's going. And if you're spending more money on bills than you can save, then you pretty much what they call in a deficit situation. You're not doing well, right? So you want to have that same mindset when it comes to investing in companies. And this information is transparent, family. All right? I'm going to leave my phone number and everything because like a lot of my family members, you guys want to, get some one-on-one, instruction on how to actually start investing. I'm definitely up to doing that. Like I said, my email address is beingwillie56@gmail.com. You guys want to shoot me an email because, like I say, the two ways that you can actually save money in a way where you're not risking it, because right now the market is so overvalued. I wouldn't suggest anybody getting into it because remember, just past January, the Dow was at like 50,000 points. Now it's down to 30-some thousand points, right? So a lot of people lost money because they didn't watch or they didn't put things, what they call a stop loss in the particular stocks, okay? But if you're getting paid dividends, it doesn't matter how far the market drops because the company is still gonna be paying you a dividends unless they do a dividend reduction. And that's when you, as a shareholder, as an investor, you do your due diligence in trying to find out what the company is doing. You can always find out what a company is doing, family. All right? But I digress. Two ways that you can save money, right, and protect your money where, you're not losing. One would be to look into what they call U.S. Treasuries. There are three ways that you can invest in U.S. Treasuries. You can invest in a U.S. Treasury note, a U.S. Treasury bill, and a U.S. Treasury bond. Okay. Now the U.S. Treasury bond is the longer term. Like I said, if you have, some cash that you're not going to use right away, but you want to protect it, and you know that the banks are not giving you anything on it, then you want to look at a U.S. Treasury bond. And the U.S. Treasury bonds are 2-year, 5-year, 10-year, 30-year bonds. You know what I mean? And the U.S. Treasury notes and U.S. Treasury bills are shorter term U.S. Treasuries. A U.S. Treasury note and a bill would be similar to what a CD is, a certificate of deposit, what these banks offer, right? And a lot of times you may get a good interest on a CD. But why chance it? One thing that you can always guarantee is that the U.S. Treasuries that you invest in are going to always pay you. They're going to always pay you because, they always have the money. How do they always have the money? Because who does the U.S. Treasury get their money from? They get it from us. Taxes. So, you would be crazy not to invest in the U.S. Treasury because one thing or two things you're going to always have I'm sorry, I hope you didn't miss some of that because someone was calling me. You're going to always have your principal at the end of maturity, and you're going to always have some interest. And it's going to be way more than what the banks offer. You dig? And also with the U.S. with the U.S. Treasury bonds, they pay you a coupon. They pay you every month. It's not really a significant amount of money, but the fact that they're paying you, and at the end, you're not only going to get your principal, but you're also going to get the interest. Okay? See, these are the things that they don't teach us in school, right? And like I said, the second thing would be invest in dividend stocks. Fam, there are a lot of different stocks out there, dividend stocks that you can invest in that they pay you. And all you have to do is just do your due diligence and doing your research. Like with anything. When you go shopping, you're just going to just buy any type of tennis shoe or any type of car or any type of appliance. You're finding out which appliance, which shoe, which car is the best for your money. That's the same mindset you should have when you're investing in dividend stocks. Like I said, brief caveat. Right now, the market is overvalued. But there are different ways that you can find out when's a great time to get into the market. Once again, we're never going to be in a financial viable situation by just working. Remember, Social Security is not going to do it. And a lot of these pensions, when the market crashes, your pension is going to crash. So you want to also establish multiple streams of income, family. All right. So like I say, my email address is beingwillie56@gmail.com. I'll be putting my number out there so you guys can give me a shout. I'm best able to be reached by text because I have a lot of people calling me. So if you're interested in learning more about this information, send me a text and we can talk about it. Okay. And in the meantime, between time, may the Most High bring you joy and family. Pay yourself first. And being Willie is 5,000.